Let's do it. Episode 15 of Great Quarter Guys. I am here, your co-host Andrew Cox, with the one and only Mr. Kevin Hill. How are we doing today, Kevin?
I'm doing good. It's a rainy day in Chattanooga, but we're doing good. So
it's just become a part of everyday life.
It really has. You know, we were talking the one day it hasn't rained in the last 2 weeks, it snowed.
That's right. One of my British friends used to say, he lives in London, notoriously rainy London. He says some people get wet and some people get rained on, and there's a difference between the two. You got to become accustomed to the rain, and it's just a part of your day, and that's what it seems to be here in Chattanooga.
I know. Michael Kenny told me yesterday that whenever he moved here, he Googled which city gets more rain. Is it Seattle or Chattanooga? And I guess Chattanooga gets more rain than Seattle.
51 inches a year here in Chattanooga on average. Seattle gets 38.
I know the Tennessee River's going up.
I know it's up like it was up 7 feet last week. So yes, it has gone up.
Yeah, definitely. So we have a great show for you today. Instead of doing one company and kind of diving deep into that, we're going to take one epidemic, I guess, and dive a little bit deeper in there. We have a really special guest that will be joining us in just a second, and that's Laurie Ann LaRocco from CNBC. She's written like 5 different books on international trade, shipping, kind of the ocean container kind of fleet, really big shipping industry, ocean-wise. And she'll be coming out, or she actually published an article on FreightWaves.com last week on kind of freight flows and how coronavirus is disrupting that, and also diving into the trade agreement. And, both import-wise, but also the export-wise, the agricultural products that China has agreed to buy going forward. So we're going to talk to her in just a second. Actually, I'm going to call her right now. And
good. I'll give you a little update on what we've been writing about thus far in the coronavirus. The Passport research team published a report about 2 weeks ago, kind of giving their feel of the data thus far. This was 2 weeks ago again. And, it doesn't give you the full effect when every day we look at these infection totals, we look at these death totals, and they creep up a little bit. You see this like drip up into the data. But now that we look back 2 weeks later after reporting the first time, things are up. Infections are up 1,300% in 2 weeks. I believe we have Laurie Ann here on the phone, so let's bring her in.
Hello, Laurie Ann.
Hey guys, how you doing?
Good. Just a second. Let me see if I can go ahead and say something right now. Let's see. My Bluetooth was supposed to be paired in here.
Oh, okay. Can you hear me now? I feel like I'm in a commercial.
Yeah, I know, right? Can you hear me now? 1 second. Let me get my Bluetooth activated again. I think it.
Yeah. So in the meantime, we'll talk a little bit about everybody's comparing this to the SARS outbreak in 2003, and the death and infection totals have been a bit higher. But this is going to be a big difference between this impact on the global economy and the SARS impact because of the way that China has grown over the last 15 years. If we can get Laurie Ann going here in a bit.
I think so. How are you doing, Laurie Ann?
I'm doing well. How you doing?
There we go.
There she is.
There we go. I set up my Bluetooth earlier in the day, and because it got disconnected at some point, so I had to reconnect that.
Yeah, so technology's a pesky little thing sometimes.
Yeah. So, Laurie Ann, let's start off. Tell us a little bit about yourself. You're with CNBC. You've written, I think, 5 books on shipping. Can you dive a little bit deeper in that and let us?
Yeah, sure.
Yeah.
Okay, well, I am the author of 5 books, and my latest is Trade War, Containers Don't Lie, Navigating the Bluster. And what it is that I've always been fascinated by maritime. Ever since I was a little kid, I grew up on Long Island. And, with 90% of everything in your home that comes from a ship, folks really need to be keenly aware of what's going on with the flow of trade as it relates to maritime, because not only is it a forward-looking indicator of a country's economic health, it could also tell you the truth as it relates to the trade war, like who's winning, if China's really buying. And now you could even use those same fundamentals looking at the coronavirus and kind of having the tea leaves, if you will, of the impact that we will see. It's just a matter of time in intermodal, and that's what I'm working on right now. And I just got some fresh data that's pretty eye-popping, if I do say so myself. It's a fascinating industry. Yes.
Well, you wanna spill some of that new fresh data? We'd love to hear it.
I would. Well, basically, I mean, one of my sources is a very big drayage provider in China as well as globally. And what we're seeing is, and it's kind of like common sense, but it's nice to see the numbers. Even though it's great that some manufacturers are opening up, the problem is you have people that cannot move within the country. And so you either have people sick, with the virus, or people that just can't move because, there's restrictions. So, for example, I'm looking at the data right now out of Kindo. You have a 70% recovery, if you will, in manufacturing with the terminals reopening, but you only have 15% of recovery in drayage. And the reason for that is that there is no trans-city service allowed. So while it's great that you've got these products that are being made, or products that can be loaded, you don't have the personnel to move the stuff. So you're going to see a massive supply chain crunch, if you will. And from what I've been talking to, from the folks I've been speaking with, you're not going to see some sort of normalcy until maybe April.
Wow.
And so if you're a trucker, that's a big deal. So, and the other thing too is I just got an email now that with some, there are some things that, you can wait on, right? In terms of seasonality. Of when things can be moved, transported by vessel. But if you have things that are time sensitive, one of my sources just emailed me saying that they're seeing a spike, if you will, in charters, in plane charters. So, folks are going to get their stuff the way they can. So if you're a truck driver, you may not be going to a port to go pick up something. You might be going to an airport. So I think it's going to be interesting to see how things unfold over the coming weeks when it comes to this. And again, that's the flow of trade. This is a great tea leaf for companies to plan ahead. You just have to, keep your eyes and ears open and read.
So one of my questions, but before we got into this, Laurie Ann, was to question you on how quickly you thought the Chinese factories could restart production. But it seems like most of them have gotten production upstarted, but it's now going to be a supply chain issue with the government restrictions on intercity of movement. Is that correct?
Correct. Intercity movement is a very big problem. You do still have a certain amount of manufacturers that are not open. They're not open maybe until next week. But it's very hard when it comes to China when you're seeing these numbers of how many people are infected and things of that nature. And the other thing is, the manufacturing plant may be open, but you don't know how many people are there. It might not be 100% staff. So the volume that will be coming out of that plant might be less. And so you and I both know less items means less items filling a container for transport. But the majority of the stuff that I'm looking at now, I'm looking at, Ningbo 5% drayage that's up and running. The best that I see right now is 30% drayage recovery. But the cost right now is between 30 to 50% higher than normal because of the lack of availability of movement.
So you're saying you're saying that there's 30% capacity in that's the highest capacity in one of the ports. It's about 30% drayage, and that's of course causing an increase in price of what 30 to 50% because of the lack of or the tightness of the market.
See, it's actually good to... I'm sorry, I was just going to say that it's good to hear you actually have some data that from non-government sources. We've almost been in the dark a bit about the Chinese economy, and that was going to be one of my questions is how much are we in the dark? But it's good that you're able to shed some light.
It's all about, trusting the people that you work with from a reporter standpoint, how valuable sources are. And the source that I'm talking to is like, please do not use my name because I don't want to be,
of course,
get in trouble, as it relates to the Chinese government. But this in particular, this logistics provider, global logistics provider, is saying that the situation won't be relieved in China until March. And as you know, with a 20 to 30 day or even 14 day, voyage, if you will, from point A to point B, that brings you into April. And so I did ask my logistics guy saying, well, remember, we all remember the front loading problem, right? Mm-hmm. And how you had the surge of volume and you had, this what they called the truck shortage, but it really wasn't a driver shortage. It was a chassis shortage because you had people using chassis as miniature, mini warehouses, if you will. They don't see it as that bad, but you will see, you're going to see, this push, if you will, going into April. But that means, does that translate into lean volumes for the intermodal industry between now and then?
So when you say pushing into April, is that everything that's kind of can be shipped out will be pushed out around April when everything gets closer to 100%? What about all the back orders? Do you think that push is going to extend for months as the back orders are filled as quickly as possible?
From what I've been told from folks, is it's very hard to gauge what the priority is within the manufacturing plants of what they're going to make first. But you have stuff that is sitting like on pallets, if you will, right? Before the Chinese New Lunar Year, where they're like, okay, well, when I come back, from holiday, we'll just get these pallets on a truck, and then we'll go onto a ship. Well, you have those items still sitting there. And the problem is, even if you're back up into full functioning, it's that whole drayage problem. It's how much how much do we have that could actually move the items from A to B? And then you have all those blank sailings as well. I mean, the blank sailings you have, I can grab the numbers, but it was pretty outstanding. It was like 30 out of 44 were canceled, combined, East Coast, West Coast, going in from last week. And remember, those are blank sailings that would arrive in upwards of 30 days coming to the United States. So you always have that trickle-down effect. So what we're looking at now won't hit our shores until, X amount of travel time.
Laurie Ann, can you give a little bit more color on if you have any on specific specific industries that are being hit the most? We know originally travel and tourism were hit, airliners were hit. These luxury goods during this Lunar New Year time. This is obviously a time where Chinese people get out and they spend a lot of money, especially on luxury goods. Can you give any color onto what industries may be hit the hardest in the U.S.?
Well, I think you hit the majority of them. I think what's going to be interesting is, from a retail perspective, how quickly they get their items in. It kind of reminded me when I was speaking with one of the analysts, Dana Telsey, about looking at the inventory, if you will. It's interesting because back when I wrote my first book, which was about the banking, when everything went belly up back in 2008, where they were stuck with inventory items. If you have things that are time sensitive from a seasonality standpoint, will you have to see markdowns? So I think we have to see, just from a standpoint with the blank sailings, with the drayage not where it should be, will the Targets of the world have to mark down maybe some spring items because they're coming in later versus, earlier? Because when it comes to this time of year, from one of my retailers, they were saying that it's the springtime items that would be impacted. So I think we just have to see when the stuff comes in.
Yeah, is that something that kind of happened during the pull forward in 2018? Is that the inventory levels, especially on the West Coast, were so high that you had markdowns to work through inventory?
Yeah, I mean, that's the whole thing. It's literally, you've got to go through your inventory. And also, too, is if the inventory comes in late, then what the heck do you do? With your Easter dresses and things like that. If it comes in 2 weeks before whatever the holiday is, or be it Mother's Day or whatever it's supposed to be coming in, what do they need to do to move that product? Because they're not going to want it. Spring's almost like, it's not like a throwaway season for retail, but it's not a huge season for retail, like compared to back to school.
I guess on the bright side for trucking, there'll be some expedited opportunities when those late shipments come in, so that should pop up rates a little bit, especially in the short term, and kind of what we saw a little bit in 2018, just kind of a different cycle and certainly a different reason for this. Do you want? I kind of want to jump into exports as well. because you've done a lot of work on the trade agreement, how that's coming in, phase one, and all the, I don't know if you call them guaranteed purchases, but agreed to purchases by China, and how the coronavirus is affecting that, and kind of what you saw even before the outbreak really saw on the numbers in exports, especially agricultural products.
Oh, definitely. When going back to the trade war, and let's face it, we're still in a trade war right now. It's just at a pause. But with what the flow of trade showed me, based on hard data, it wasn't Republican or Democrat. Flow of trade is agnostic, right? It flows, just tells you like it is. China was not buying. China, over the course of the trade war with the United States, was very successful in terms of expanding its trade world outside of the United States, despite the rhetoric that we heard from President Trump saying, our soybeans are the best in the whole world and the quality is great and, they need us. Well, they didn't. And it was all based on a flow of trade. Because of the tariffs, it enabled our competitors, be it Brazil, be it even Canada, just north of North Dakota, to raise the price of their soybeans just under what our tariff was. So they were making more profit, and they started expanding their fields. You had China buying, instead of North Dakota soybeans, they were buying Canadian soybeans, and they were an increase by 60%. And then with Brazil, we're going to be looking at that now, and I call it the tail of the soybean. April is normally when China starts buying their soybeans, because they buy when they're fresh, and that's when they come to harvest. We really need to look at that time to see the volumes of how much they're going to be buying, because you have African swine fever. And, their pig population was decimated by 60%. They didn't need as many soybeans for that type of meal. When it came to eating, they increased their Brazilian soybean intake by a lot more. And if you listen to the rhetoric by the Chinese, and you listen to the rhetoric of, say, even the EU, that is contested, if you will, the phase one, the EU and China have increased their trade relationship. But you have China saying, this is not going to impact our trade relationship. Translation, they're going to continue to buy. So we lost whatever opportunity there was to grow additional. But what you're going to see, the loophole in all of this, is lumber. They need lumber. Lumber is agriculture. So when people think that this phase one is going to be a boon for the soybean farmer, it's based on the flow of trade. If China wants to make everybody mad based on the increase of relationships that they did, that's what they would have to do in order to buy those soybeans. And they're not going to. They've already said that.
Laurie, I'm glad you mentioned I guess not the ease, but the ability that China's had to move their production away from America to other countries. We've heard from U.S. executives and from U.S. manufacturing companies that they haven't had such ease, that no one's really as prepared to build manufacturally as China. So the U.S. companies have had difficulty moving it away. And you mentioned something just a minute ago when before we got on the trade topic about companies marking down items. So do you think it's more likely that these companies will mark down items that have arrived late rather than try to find production outside of China during this coronavirus?
If they haven't already started to do that, from what I've been told from some of the manufacturing guys, they're not going to. Coronavirus is, from what I've been told from the retailers, they're more concerned about the existing tariffs that are still on their product versus the coronavirus. Because the coronavirus eventually will peter out, once it gets warmer. But the one thing that is sustainable are those tariffs. So if you're going to have movement out, it won't be out on the coronavirus. It'll be because of those tariffs. But the problem is the interconnectivity, if you will, of China. One of my retailing sources, who is a consultant in that area, told me that, say you have a blouse, okay, but you make the blouse in Taiwan, but the buttons can be manufactured in China. If the plant is closed in China, you can't get the buttons, or the thread, if you will, over to make that blouse. So there are components where you may have the raw material to make the item, but the the doohickeys, if you will, right? The thread, the buttons, the labels, those may be coming on an as-needed basis. And if that plant is closed, they don't have the inventory, if you will, to make that item.
Right, Laurie Ann.
So
I was just going to mention that. So our Passport research team just wrote something about the coronavirus, did a little bit of an update, and I think they said something that goes well with what you just said. They think the largest impacts to any other international economies will be the neighboring countries of China. Do you think that's true?
yes.
Because of the interconnectability.
Exactly. And one of the other things which I found was interesting was one of my sources was telling me that China, because of their, Belt Road Initiative and China 2025, and because of their trade, their trade prowess, if you will, right? The leadership, the Chinese leadership for some of these manufacturing plants, they can't get back. So say if they have a plant in the Philippines, but the worker, like the manager, is in China, that the Philippines are not allowing the Chinese in. So you may have workers ready to go, but the bosses are stuck in China, which leads you like all the way back to what we see with the problem with drayage, how there's no trans-city service. You can't be moving around. You're not allowed. So it really just shows you the fingers, if you will, the web that China has created outside of itself. And, it's just fascinating.
It is fascinating. It definitely is. If we take a view of stocks and industries that are going to be the most affected by this, retail, of course, is one of those. Logistics as well. On that side of things, what other industries are the most affected by supply chain? And do you think it's mostly companies that have exposure from manufacturing goods in China and importing, or is there just as much exposure through the coronavirus and lack of facilities for American companies that export to China?
Well, for the last, what was it? For the last 14 or 15 months, U.S. exports to China are down. China's not buying, no matter what the rhetoric is, or if they are buying, it's at a very small, it's at a lower amount. So when we all hear about how great it is that the trade deficit, right, between the United States and China is down, yes, it is down. But when you look at the numbers, U.S. exports to China are down, and U.S. and Chinese exports to the United States are down. So it's smaller. But just not even, I would say maybe like an hour or two ago, the Port of Oakland, released its numbers, and they talk about how U.S. exports are up, which is great, which means that we are finding ground. But they're also saying in the same breath, when you're looking at the coronavirus, when we look at this outbreak, it kind of blurs the trade outlook because we don't know. And that's the word that they're using. It blurs the trade outlook. When it comes to quarantines and these emergency measures, right? When it comes to what's happening with manufacturing and how many people are in there, and also the health of the consumer, they're not shopping. So if you're making a product that is going into a Chinese store and people aren't buying, that means the store is not ordering them. So again, we have to see, it may not be an impact right now, but it might be a delayed impact, because we're not getting those orders because things are still, closed.
Very good.
And that impacts rail. It impacts rail. It impacts trucking.
It definitely does. All modes of transportation, right? It just flows through there. It seems like air is doing maybe a little bit better because of the flows, but that will probably be cycled out soon, and basically there will be some serious volatility in all the freight markets.
Exactly. And the interesting thing is, Gene Soroka told me this, back during when the trade war was at its height. People celebrate that we are expanding on our exports out to other countries like Vietnam, which is great. But he said it takes seven Vietnams to equal one China in terms of volume.
Yes.
In terms of container volume. That's a lot.
Those
are a lot of trucks.
It's a lot of trucks. It's a lot of transportation. I noticed that whenever we dug into the U.S. China, whenever this started last May, is that especially with Vietnam, it's a tenth of size, maybe even smaller of that of the import market to the U.S. So it
Exactly.
does. It takes at least seven Vietnams to equal one China. So everyone can't hit the door at once and expect to go set up manufacturing plants with actual facilities and labor in Vietnam. So it squeezes everyone inside and outside of those manufacturing lines.
Exactly.
Yeah. Well, I think that's that's all the time we have. I think you have a meeting to go to as well here at 2:30. So we'll let you off. So if anyone out there wants to get a hold of you, how is the best method to do that?
Best way is through LinkedIn. I've got lots of great facts and figures on the flow of trade. In trade war, containers don't lie, and I'm always available, and I'm going to be posting some LinkedIn data shortly.
Perfect. And you have something out there with a route of I think a Carnival cruise line around China that's not allowed to dock. So I saw that earlier today. It's fascinating.
Yeah, it's amazing. It's on a cruise to nowhere.
Yes.
And unfortunately, you got people that might be sick. So I don't know if it's a pleasurable cruise to nowhere. So we'll
Very
see.
true. Well, thank you again for your time, and certainly come back on the show anytime you'd like.
Thank you so much. Thanks for having me.
You bet.
Thanks, Laurie Ann. Have a good day.
Thanks.
You too.
Bye-bye. There we go.
All right. Well, we apologize if there were any technical difficulties there. Don't know if she was as loud as we would have liked her to be. She sounded good to us. Not sure how she sounded to you guys. But thanks for sticking with us through that one.
Live podcasting. It's
That's
an
right.
adventure every time, isn't it?
Absolutely. We're learning. That's our first live call-in. We'll get better from there.
Yeah, our first live call-in. And we had a few other, we had an actual intro today, which was really good. It kind of threw us off the mark a little bit because we did 3 or 4 practice runs before we knew they were practice.
Yeah, we'll have to put a blooper reel together here in the next couple weeks.
Well, very good. Very good. We'll move over to our next one. Thank you, Laurie Ann, again. And thank you, our friends over at Carrier Direct that also supplied a lot of information for that segment on coronavirus and kind of implications for stocks and industries. So thank you, Carrier Direct, Diane, Ryan, and Peter. But Ryan and Peter, I think, are in Miami Beach right now. I'm not going to feel too sorry for those guys.
I'm sure
they're down on the Stiefel conference on Miami Beach in the Fontainebleau right now. So
sounds lovely.
It is lovely.
It rains a lot in Miami, but at least it's 85 degrees.
It's gorgeous. I usually go down there. I missed it this year.
Yeah, it's the same forecast every day in Miami. It's like high of 85, low of 65, chance of rain in the afternoon.
Yeah,
it's
just beautiful.
Yeah.
Beautiful down there on Miami Beach. What's next, Andrew?
We have the DHL supply chain pricing power index. Talk a little bit about the pricing power between the shippers and carriers in the market. We have fallen again to a total of 25. This is 5 out of 6 weeks now. The shippers have gained some pricing power. The pricing power peaked at 45 back towards Christmas during that typical holiday capacity tightening. But now those shippers are in dominant control. I think rates are down below $1.40 a mile. From our DAT rate view.
They are, and from what Laurie Ann was saying, that it could get a little bit worse because of the lack of imports coming in, lack of exports going out during this time of year. And though it might brighten up in April going forward, as everything on pallet that can't ship right now will ship out.
Yeah, sorry, I've been distracted by this massive jackhammer in the office.
I know, right? Live podcasting.
Here we are. Things probably going to get worse before they get better. This is just it's very ill-timed, not only for China but for the global economy as things have started to slow down. Chinese economy was at 6% last year, lowest it's been in 30 years or so, and it looks to even go lower this year. Them being our biggest trade partner, 20% of the world GDP.
Yeah, I think the back order process, because basically coming into April, May, you're doing your orders to get things on a boat to get here, certainly before Black Friday, but basically in October, so you can have your distribution chain. 2018 was all over the place because of pull forward. It destroyed the natural seasonal pattern. I think we're going to see another year where it destroys the natural seasonal pattern. So in the short run, it could be a little bit painful for trucking and transportation and rail and intermodal, but at some point you're going to get a bottleneck, and there's going to be a lot of expedited type of situation. So, wait and cash in on those.
Yeah, Dooner and I talked about this on the FreightWaves radio this weekend, that this year is going to set a new normal for a peak season. Not new normal, but a new peak season in 2020 than it ever has. It's going to have that big disruption whenever this virus gets completely under control and everybody goes back to work.
And hopefully that's soon.
Hopefully. I mean, we can only
know.
hope it. It almost seems now, at least in the Passport research project that JP and his team put out, it seems now that they've contained everyone in Wuhan, that it's almost like as they're sacrificing that little region and trying to keep everybody out, which, we'll see will end up being a good plan or not. We don't know if the data is correct, but we do know the data is scary. There's over 1,000 deaths now. So yes, it's a big impact.
It is scary. And that Passport research is a 5-page research report on the coronavirus and its impact in China and basically freight flows. Very similar to what Laurie Ann was saying, but delving into different pockets of data. And that's going to be published out, I think, either this afternoon or tomorrow. I know in tomorrow's newsletter, it's going to be included, as well as I think we're sending out in a special email this afternoon. So it's a free peek into the Passport research. A service that we have here that's tied in with live event tickets. And it's a great product. Just go to freightwaves.com/passport to learn more about those packages.
And I guess one last little bright note for both sides on the pricing power, on the DHL supply chain pricing power index, is we've had some good economic data come out this week and last week. Employment was again really strong. 225,000 jobs added in January, so a good number there. I did see that they had revised down. They do full year revisions, and they revised down like 500,000 jobs over the last year, but it still didn't change the unemployment rate. So things are still chugging along. We had some real
PMI?
wage growth. Yep.
So the
PMI finally
is, what is it, 50.3 or 50.9?
50.9. So meaning manufacturer. Yep. Expansionary growth for the manufacturing sector. That was first time since, I think, July of last year.
Yeah. And on the bad note, the rates are still down.
Yeah, rates are still down.
They're like in the toilet.
Yes.
They've gone back. So basically, still over capacity.
Yeah, I mean, you look at our FreightWaves rate predictor that's housed in Sonar. We're looking forward a month, even 3 months. You're not seeing much change to the upside there.
You're really not, and I don't think you will until certainly the seasonal peak. The summer season when manufacturing, construction, really produce. Yeah, exactly right. Really gets going. So I'm going to be a perma-bull about March and April, and hopefully I won't have to become an even more perma-bull after that. But we will see. We will see.
Well, cool. So some of that other riding off that economic data, we can talk a little bit about the earnings season thus far. We've the last week we've had a couple big names. A big one yesterday was XPO. We did a whole segment on them a couple weeks ago.
We did. Back 2 weeks ago, I think episode 13, we had "Is this the end of XPO as we know it?" And from their quarterly earnings in the fourth quarter, it looks like yes, it probably is. It looks more and more like it is.
Yeah, the LTL is outperforming everything.
83.9.
Was that the OR?
That was OR. It was a 500 basis point improvement year over year, but Seth told me that part of that was with a real estate transaction, so it was really only about 150 basis points improvement, which is still fantastic. The brokerage, and that's something that we're working on at the Freight Intel Group, is going through all the public brokerages and seeing change quarter sequentially, as well as year over year changes in margins and revenue and loads. I think they outperformed every other public broker with that.
Something in the water.
It really is
there in Greenwich.
It really is, and the great thing, or crazy thing, however you want to describe it, is that their net income was up 18%. Yada yada yada. They bought it back 25% of their shares. 25% of XPO shares they bought back over the last year in 2019, and 10% of that, or in Q4 it was 10%. So in the Q4 they bought back 10% of their shares.
Gives a little bit of light to that EPS.
It really does.
50%
year. It's basically non-financial information. No numbers included in this. But one of the most interesting things that they announced their new CFO, who comes from Wyndham Resorts and also Avis, and specializes, this is basically all he does, spinoffs and asset sales.
Right.
So basically, when we say, is this the end of XPO as we know it, it probably is.
You bring in the breakup guy.
The breakup guy, and he's going to maximize the value out Basically, they're trading at 10 times EV to EBITDA right now. And if you can get up to somewhere in the range of Old Dominion,
Right.
14,
14,
15, 16,
yeah.
then you basically made a fortune.
Yeah.
Just in that move.
Again,
So
and if they spin off these 4 units, they can have $10 billion in cash or so, pay down all their debt. You're looking at
take themselves private. They can roll up again. Brad Jacobs can retire, maybe go roll up something else, another industry.
I don't think
I don't
this
know.
guy will ever retire.
Oh wait, I don't think
he's.
You can't.
I think he's like the Joe Pa of building companies through acquisition.
Exactly right. So that was one of the most interesting ones that they reported late last night, or not late last night, but after market.
They dropped LTL operating expenses over 20% year over year. I mean,
I don't know how you do that.
I don't know either. I think this pure play LTL from XPO, whenever they get these divestitures done, is going to be a monster.
I think it is. It's going to be the third largest LTL provider. It's going to have a great OR. They'll be able to do acquisition. They'll have the flexibility to do whatever they want to. And it'll be an interesting story to see in 2020, and we'll follow it because, basically a really well operating company and really good financial engineering. And it's just a compelling story.
Definitely. With Brad Jacobs at the helm. Let's jump on to Echo. Echo actually had some pretty promising Q4 numbers too, comparatively to some of these other brokerages and intermediaries that have been.
They did. Their gross margin went down 70 basis points, so 0.7%, which is really good. XPO did, I think, the same, 70 basis points, and both of those guys saw the lightest, the lightest declines in gross margin percentage.
Yes,
which is good.
With that said, net income down almost 80% on the year over year. So, coming off a really hot year in 2018, it's not all that surprising that the brokerage revenue would be so far down. But management they have the same expectations as us. They are perma bulls as well. They are expecting a substantial improvement here through the end of Q1.
Yeah, they had flat volumes too, I think, right?
I believe so. Yeah.
Yeah, which is good. Which is good. You can do 2018 or 2019 over 2018 with flat volumes, and only a 70 basis point drop.
Yeah, that's the most important part for me. Is the margin compression was really limited. They were able to cut some costs and keep that margin close. Mm-hmm. It's good.
Definitely.
Next is Daimler. Did I pronounce that? Is it Daimler?
I think it's Daimler.
Oh, Daimler. Wow, my German.
I don't
is not
know.
Good.
And never trust me with pronunciations.
I should,
right? They're number one. Do not trust me.
So yes, this is the parent company of Daimler Trucks, one of the biggest truck manufacturers in the country. They reported a 51% drop in new Class 8 truck orders year over year.
Oh yeah, that's the
story, right?
That is the story.
We've been below this this level of like 225 per month Class 8 truck orders that will replenish the fleets leaving. We've been below that number for a year now. This is not unexpected to have a 51% drop.
Oh, it is nothing at all. And talk about easy comparables or comparisons year over year. New Class 8 truck orders probably have the easiest comparisons that you can ever think about, right? They were 10%. January orders were 10% year over year above
growth.
And they were, I forget what maybe 15,000.
Yeah, they weren't a lot.
No, they weren't even close to where historically where they should be. Replacement rate's about 23,000 per month. So we're still at 15. We're year over year gains and still about 8,000, probably a third below what replacement level is. Which is good for capacity.
Good sign for the truckers.
It is good sign for the truckers. Yeah,
but this again, this will take time to churn.
Not good
some
sign.
Of this.
Not good for Daimler though.
No, not good for Daimler. But with that being said, they still grew revenue 5%. EBIT did fall 11%, so they weren't able to reduce costs very much.
And basically, Daimler, this isn't just a subsidiary that's public, right? It's the entire Daimler organization,
which
is
Mercedes-Benz, right?
Mercedes, Chrysler. So trucking's probably a very small portion of their portfolio.
$500 billion in revenue. So I don't, this is a very small portion.
Yeah. How'd the revenues do again?
The revenues were up. The 5%? Daimler Trucks revenue was up 5%.
Oh, okay. Trucks.
However you pronounce that company, their truck division revenue was up 5%.
I just wonder how their total revenue was, because the car market's kind of plateaued as well.
I can tell you.
Don't worry about it.
Okay. We won't worry about it.
Don't worry about it.
Okay, so we've got a couple fun segments up here for long shorts. I think we should talk these ones out a little bit more because there's some good things to talk about, especially on the second one. The first one may go a bit shorter. This is Airbnb, one of my favorite companies in the whole world. There are talks for an IPO in 2020.
Mm-hmm.
I'll run through a little bit of the reason why they want to do that and what they've been doing thus far. So they had proven themselves to be a profitable tech company. They made almost $20 million in EBITDA in 2018. But they ramped up marketing expenses to try to bring more listings onto the platform in 2019. They spent hundreds of millions of dollars. I think they've now got about 7 million properties in 160 countries or something. So they've almost gone all the way around the world. Their user base is growing 25 or 30% each year. Their bookings are up 20% year over year to $10 billion total. But they're planning for this IPO in 2020. It's kind of been pushed along since 2019. Are you long or short that Airbnb will IPO in 2020?
I was looking for something because I got an alert on my phone when I was walking back from lunch, and it was something to do with Airbnb. I can't find it now. It was probably from the Wall Street Journal or something. I'm long Airbnb, even though they lose money.
You think they'll IPO in 2020 though?
Yeah. No, I don't. So I'm short.
Okay.
I'm
long
short.
IPO as a company, short them on IPOing in 2020.
Yeah, I think this would be tough for any tech play that doesn't really have a focus on profitability and a plan to IPO in 2020. 2021 maybe it gives them time to adapt to the new market. But I think after WeWork, everyone has to think about profitability or at least get a goal. Uber's really, I think Uber's actually serious about
profitability.
it.
Yeah.
I think they really are. We got some information from the PR agency about Uber Freight, and they've lowered some of their detention pay and gotten more in line with the market in general. And their comments on their conference call, it looks like they're actually driving toward profitability, and maybe I think their goal now is fourth quarter of 2020.
Yeah, I've heard the same. I would agree with you. There's been we've talked about it here at FreightWaves and all over Silicon Valley that there's been a change in investor sentiment, both private and public markets, in the last 18 months or so. And WeWork was the pinnacle of it. That was the biggest debacle of them. But there were many before them. The Peloton IPO, Lyft, Uber, Slack, a lot of companies that had terrible IPOs, probably IPO too early, pre-profit.
The great news on Slack this week.
Yeah, big
IBM.
Big IBM as their customer. Their stock jumps, 75% or something, something crazy. I am also short them IPOing in 2020, but not not have anything to do with Airbnb, only because of the sentiment in the market currently.
Yeah, same.
I do think they get back to profitability either this year or next year. I think they've been ramping up and spending a lot of money, but I think they will rein that in. They'll use the sentiment that they're getting back from their S1 and from public investors. One thing that is interesting, though, they're looking to do the same thing that Spotify and Slack did, which was do a direct listing. They're not looking to raise money through an investment bank, so that could change their decision on they might not get such a good gauge on sentiment as you would going through an investment banker.
True, but once the shares hit the public market, you have the retail investors or the money managers who are the same investors that bought into the IPO and flipped them, and the shareholder base kind of churned through that. So with that said, it's better with the direct listing, and in this environment, I don't think it's bulletproof. I think they probably wait until 2021.
All right, so we're both short there on the Airbnb IPO in 2020.
Yeah.
Now, next is something that we've just gotten. We saw it yesterday. This is from Trevor Milton, the CEO of Nikola Motors. He had teased this truck back, I guess, whenever the Cybertruck was dropped, when Elon Musk dropped the Cybertruck.
Yeah, you trolled Elon.
Yes, he posted a truck that looks more like a truck. It looks like a very nice, 2020 style of pickup truck. It doesn't look as futuristic as the old ones, but it certainly doesn't look like an F-150. Nikola's made headlines across the freight industry with its hydrogen approach to a more sustainable over-the-road transportation. They're trying to make zero emissions big rigs. He believes that the road to implementation for hydrogen is much smoother than electric, which he's probably not wrong. It's much easier to transform a gas station into a hydrogen station than it will be to transform them into an electric station. I've seen this truck. The specs are ridiculous. He's thinking like 600-mile capacity on the 600-mile range on this thing, 900 horsepower, 0 to 60 in 2.9 seconds. I mean, it's got all the specs of the Cybertruck plus a much longer range, and it's more up your wheelhouse. Are you long or short this truck, the Badger?
So number one, I'm long hydrogen. I think it's been a while since I really got into hydrogen or electric. I mean, it's probably been like 10 years. But I still like hydrogen better, and I wish I could tell you exactly why. Okay. But I've forgotten those things. I'm getting old these days. But hydrogen, it's water based, so you don't need electricity plants. You don't need all the energy that goes into to getting materials for the battery, right, and then recharging that battery. I think it's a much cleaner way of operating, and I think the truck is awesome. I think it's badass, man. It is so much better than the Cybertruck. I mean, it's something that I think anyone would drive. I think any contractor out there, anyone who uses a truck for work or for play or who would buy a F-150 would buy that truck. And if you haven't seen a picture of that truck, go out, Google Nikola?
Yeah, just if you Google the Nikola Badger.
Yeah, Nikola Badger, it'll come up. It's just a really great truck.
So you're long.
Oh yeah, I'm long.
I'm gonna juxtaposition you here, and I'm gonna go short on the Nikola Badger. I think I like Trevor Milton. I really like what Nikola's doing, but with that said, I think they're playing in a land that they don't quite understand. They don't understand car manufacturing. They haven't even produced their first Nikola truck yet. This has been 3 years after they released it. We're still waiting on the first one of those to roll off the production line. So he gave no time frame onto when this would come out or
so
even a
he's
price
acting
point.
like Elon Musk.
Yes, he's giving no price point, no expectation date. So they may end up producing a few of these, but they've also brought out an ATV and a Wave Runner, a Sea-Doo that said they're going to be all hydrogen powered Sea-Doos. No, Tesla's never come out with either of those.
No, they came out with the four-wheeler, right, or something. The Cycle. Whenever they launched the Cybertruck. Or is that maybe it was Nikola?
I think it was Nikola. He has Elon's said that he won't produce those type of vehicles. He almost killed himself in a motorcycle wreck.
Oh, that's
a bunch
right.
of years ago. So he said he's going to stay away from. Even though I do,
he's just going to go space.
They could dominate the motorcycle business if they wanted to. I think electric motorcycles are the future. But yeah, so I'm short the Badger. I think it's a cool truck. I'll never buy one. I'll take a Cybertruck over the Badger all day. If I wanted a truck like that, I'd go buy an F-150, a very dependable.
So you take the Cybertruck over?
Oh, any day.
Over
twice on
the Badger.
Yes, absolutely.
Oh my god.
Absolutely.
Seriously?
Yeah, seriously. Well, and if I'm going to buy a truck, I'm never going to buy a truck. But if I were to buy a truck, I'd want one to look like nobody else's truck. So I'd go for the Cybertruck. Get that thing in matte black.
You would achieve that goal.
Matte black. Oh yeah, be gorgeous.
Yeah. Be like Mad Max.
Yes, I'd probably
going through the Australian desert.
Yeah,
you have to get
movie.
Dean in the seat next to you.
You seen the new one? The one with Tom Hardy and can't remember the woman.
No, I barely made it through the first one.
Oh, the new one.
The original one.
The new one's incredible.
I don't know.
Never got into.
It's
less outlandish. It's kind of more dystopian dystopian world. Yeah, you should check it out.
Okay, I will. I will. I'll go. I'll go rent it, get it on Amazon or something like that.
All right.
Very good.
All right, what do we got coming up this week? We got any research coming out? It's maybe Seth's project on updating.
We do. We have two. We have two things coming out. The first one is a shipper rate outlook, sponsored by U.S. Bank and Recon Logistics, that will go out. And then second that we have in Passport and Sonar is Seth's paper, which I can't think of the name, but basically
it's an
update
brokerage performance through the cycle.
Through the cycle, which we published the first one back around July-ish of this year, and we've updated that for Q3 and Q4 numbers, and we're going to pinpoint where in the cycle we are. And if you have questions about what the freight broker cycle is, you can go to FreightWaves.com, or actually just Google FreightWaves, freight broker performance across the cycle. And there's an article, a preview of the whole report out there that explains the four phases of margin contraction and expansion across the cycle of performance in this cyclical industry.
That's right. And I guess we're now 80 days out from our event in Atlanta, May 4th and 5th, our FreightWaves Live. If you want tickets to that and all of our research, you go find passports. You get on freightwaves.com, look up passport. You get 2 free tickets and all of our research for a year for a great price. So go check it out.
You get 1 ticket for the spring and 1 ticket for the fall, and all of our research, JP's research. I think we're counting up. It's going to be it is somewhere between 15 to 18 pieces of research, both micro and kind of macro research across the freight industries, trucking, intermodal, ocean, freight flows, coronavirus,
everything.
Anything and everything.
Yep. And we're always open to new topics, so you shout them at us if you have a question.
Definitely. Yeah. Find us on LinkedIn. My email is khill, KHILL, at freightwaves.com.
Mine's ACOX, ACOX, at freightwaves.com.
Yeah. And again, thank you very much, Carrier Direct, for providing us a lot of this great information, and Laurie Ann LaRocco.
Your pronunciation.
I know. It's horrible, isn't it?
Okay. Well, we'll see you next week.
Okay. Yes.
All right.
See you next week.
Thanks for listening, guys.
Bye-bye.